So Ghana's newly appointed central bank governor, Johnson Asiama, acknowledged that inflation remains uncomfortably high at 23.1% in February, far from the Bank of Ghana's 8% target. While inflation has eased for a peak of over 54% in December 2022, Asiama emphasized the need for a balanced monetary policy to sustain the disinflation path without disrupting economic recovery. So, with Ghana emerging from debt restructuring and facing global risks, the bank's Monetary Policy Committee is set to decide on interest rates on March 28, while fiscal measures face scrutiny under the IMF's lending program review in April. This morning, we're joined by Patrick Abankwa, who is a financial analyst and investment advisor. Thank you so much, Patrick, for joining us.
Thank you very much, and good morning from Ghana.
You're welcome. So, Ghana's inflation dropped from over 54% to 23.1%. Let's start from the point where we have an understanding of what strategies or measures the central bank actually exerted to even halve the deficit. Let's start from there.
Okay, so I think we need to, first of all, look at the drivers of that particular inflation. The drivers were basically food supply shocks, exchange rate volatility, and then fiscal pressures that the country at the time was going through. So once government was able to support the food supply chain in the country, also being able to put the cedi depreciation under control, that meant that with time, we're able to put the inflation back on track, even though we are not yet at the pre-2022 rate that we had. So these are some measures that the central bank took together with the government to try and bring the inflation from 54 that we had somewhere in 2022, the current 23.1%.
So if Ghana is hoping to achieve economic recovery now, what do you think it should prioritize?
So I think that in terms of priorities, first of all, we should continue to stay within fiscal discipline. Government should stay within its expenditure. We should not be jumping into expenditure that does not bring immediate impact in terms of our GDP growth. Once government does that, we'll be able to do that. Then again, government should put in place measures to ensure that the cedi does not depreciate against the dollar, as we saw some few years back. Once we are also able to manage the cedi depreciation rate, then our currency will continue to be strong. And the third thing has to do with export and import. The mismatch between the two, which put pressure on the local cedi, again, is one factor that government should also focus on. So I think that if you also focus on agriculture, we continue to put in a lot of resources as producing stuff that will be able to use within the country, and that will bring imports down. That will also be a sustainable and long-term plan to keep our cedi within its checks.
Well, let's look at what the CBN governor, that's Johnson Asiama, said. He mentioned the need for a balanced monetary policy. What does that balance look like in practical terms for businesses and consumers?
So the balance here is the fact that, since the beginning of the year, there has been some cut of treasury bill rates from 28% in January to 15% and 14% as we speak. Now, that particular drop in rate is one that will help bring lending rates down for the business community. However, that can also put a bit of pressure on the local cedi because investors at the moment are looking at inflation rate of 23% as against their investment return of 15%. What it means is that eventually investors are going to move their monies from the local cedi to foreign currency or look at other avenues for them to invest. And if that trend continues, that will begin to put higher pressure on the local cedi. So that's the balance that the central bank governor was trying to espouse, to say that, yes, it's good to bring the rate of inflation down and also the rate of treasury bills down. However, if you don't manage it carefully and it goes overboard, government will begin to struggle. Government will be missing its target when it comes to treasury bill accumulation week on week, and that's going to force government to go to the capital market, for which at the moment we can't also go. So that's the balance that the governor emphasized that we need to really check in times like this.
And we know that Ghana is nearing the end of its external debt restructuring. But then with these postulations that you've given, do you think that will be enough for the government to actually ensure long-term financial stability and, of course, avoid another debt crisis?
So I think that if you look at the process within the debt restructuring program, which is largely completed. Even though we know some final negotiations are ongoing with external creditors, I think that we have to also look at the overall concept around why we went into this exchange program. We went into this program because our debt as a country was getting to the point of unsustainability. Once we were getting there, it means that government was going beyond its borders. Government was not able to manage its foreign currency rate. Government was not able to manage inflation. If you're able to bring all of these things down under appreciable levels, then the target that we set ourselves, for which we went to IMF, will be met within that period. However, it comes with its own challenges. And the challenges that it comes with is the fact that if government is trying to be sustainable, there's also the challenge of infrastructure, where you need to find a balance between the two. That is where IMF is very clear on what government can do in terms of some freezes on government employment, some tariffs that government cannot subsidize, and all of these things, in one way or the other, leads to some kind of economic hardship in the country. So we are getting there as a country, little by little, but it bestows on the new government to ensure that we are on the path of debt sustainability. We don't go back to the issues that led to Ghana government going back to the IMF in somewhere 2020.
Amidst financial adjustments, we hear that the Bank of Ghana's Monetary Policy Committee will be meeting March 28th to actually decide the next interest rate move. What would you advise in terms of the impact? Would it be a rate hike, or what do you even anticipate, a rate hike, a cut, or hold? And how do you think that would affect businesses, investors, and Ghana's broader economy?
Given that the governor has said that we need to emphasize on balance, I expect the MPC, on the worst case scenario, to hold the policy rate at the current rate of 29%. I think a cut will be a premature decision at the moment because we still have inflation still above 20%. But a hike for me will further stifle the economic activity that we are experiencing in the country. What I expect the central bank to do is that they are likely to maintain the policy with a cautious stand, and that will signal commitment to disinflation while monitoring the fiscal adjustment and external inflows. I think that forward guidance will be key as markets will watch for hints on future rate cuts, especially if inflation continues to decline as we have seen for the last 6 months of the year. So that's my projection based on what the governor has said since he took over as the governor of Central Bank.
Ghana's fiscal measures will soon be reviewed by the IMF according to reports. But then for Ghana, what are the key areas that must be improved upon to ensure continued support?
First of all, we need to work on increasing our revenue lines. So the revenue of the country must be improved. And this is one area that economists, including myself, have said over and over again. We need to expand the tax base of the country. If you don't expand the tax base, it means that the few people who are paying tax will continue to suffer. And that means that we are going to put burden on them. And that sometimes leads to tax avoidance and tax evasion. So revenue growth is one that will lead us to the point of sustainability. Two is fiscal discipline. Government should stay within its course. When we present a budget to Parliament approved, we should ensure we stay within that so that we don't go overboard and now go and be borrowing from the local market, and that puts pressure on our sustainability as a country. That is, for me, is also another focus. The government should also find ways and means to ensure that we are managing the currency situation of the country. So the more we are able to put the CD against dollar depreciation under control, it gives businesses the opportunity to expand and then get into other areas where employment becomes the order of the day. We're able to employ more people because they're able to predict based on the local CD performance. So I think that these are critical things that government can do to be able to sustain the gains that we are enjoying so that we don't get back to IMF over and over again. Don't forget the IMF program that we are on. It's about the 19th time Ghana has gone to IMF on a program like this. We can't continue on this path if we indeed want to be self-sustaining as a country.
You talked about growth, revenue growth. Just to wrap things up now, gold exports and remittances have boosted Ghana's trade surplus. Do you think that the country can actually leverage these in terms of gains to actually fuel growth for the country, especially with geopolitical tensions and a weakening Chinese demand looming?
Yeah, I think that we can focus on areas like gold export, as you rightly said, remittance, as you rightly said. And this will help us get an improved reserves and also stabilize the cedi, which in its entirety will lead to inflation outlook. However, we should be mindful of external risks as well as we do this. If the external risks that we see remain, then, for example, global oil price fluctuations, tighter U.S. monetary policy, and the potential delay in Ghana's debt restructuring could renew some exchange rate pressures. I think that domestically, upcoming election cycle also poses some challenges for the country, but I think that we are on the path that if we sustain it, we'll be able to come out of the woods and put the country back on its growth trajectory that we are all expecting.
Okay. Well, we hope that all these can be put into considerations for Ghana's economic growth. Thank you so much, Patrick Abankwa, Financial Analyst and Investment Advisor. It was nice talking to you.
Thank you very much.